This video will cover the topic of internal control systems. We're going to look at the auditor's approach to assessing these controls and systems at the client. For us to do this, we need to cover the following. Understand what a control is, the objectives of control systems, the limitations of a control system, the auditor's expectation of an internal control system, and finally, what the auditor does or their approach. A control is a procedure put in place to achieve company objectives. For any organisation to run well, it needs sound control systems in place. The key objectives of a control system should be to ensure accurate accounting records, to safeguard assets held by the organisation, to prevent and detect fraud, and to ensure an efficient working environment. There are limitations to internal controls including human error when making decisions and processing in a system, fraudulent collusion, staff working together to commit fraud, and abuse of authority, those officially making decisions within a system and overriding controls. ISA 315 tells us that auditors must understand the client's internal controls. For an auditor to assess whether a control system is strong or weak, they must have an understanding of what is expected of a control system. To give the auditors a benchmark of what is a good control system, the standard also gives us the 5 components of an internal control system. To help us remember these components, remember it is a crime not to have strong controls. The C is control activities, the R is risk assessment procedures, the I is information systems, the M is monitoring of controls, and the E is environment. The control activities include all of the individual procedures and policies that make up the system as a whole. These control activities within a system will ensure errors and fraud are reduced if implemented and followed properly. Examples of control activities include authorization, regular performance review, accounting reconciliations, segregation of duties, IT controls, and physical controls. Authorization or approval of transactions can assist in preventing non-business related transactions from occurring. It can also assist in areas such as cost control, as if approval is required by management for purchases, then review of the need for these items can be made before the order is carried out. Authorization should be made by a senior official of the organisation, and ideally, the higher the value, the more senior the approval should be. Regular performance review by an organisation will help identify potential misstatements by the client themselves. If the client performs its own analytical procedures, comparing their transactions with previous periods and budgets, they can highlight unusual trends or differences which can then be investigated internally. They can also compare figures to key competitors to keep an eye on their market share and performance. Accounting reconciliations are a brilliant way to identify misstatements in the accounting records. Regular accounting reconciliations ensure misstatements are dealt with on a timely basis and help identify if there is a problem with the control system as a whole. The key accounting reconciliations are bank, receivables, payables, and inventory control reconciliations. Differences highlighted from this work is then investigated so that potential misstatements can then be corrected before the auditor arrives to complete the audit. Segregation of duties is the sharing of responsibilities within a control system. Imagine one employee responsible for everything within a control. This increases the risk of errors and potentially the risk of fraud also, as there is no supervision or checking one another's work. To have more than one employee working within the system, sharing the role and even rotating duties increases accuracy. IT controls cover a range of activities to protect the computer systems being used. They also ensure other control activities are managed. Examples include backup procedures of data, software installation and update procedures, security including passwords, sequence checks and batch total checks when posting transactions, and authorization limits to ensure transactions are valid. A good computer system should include these control procedures. Physical controls are present to ensure access into the system and the business itself is authorized. These controls include restricted access such as swipe card or code access into the warehouse, CCTV, and alarm systems. Each control activity is in place to protect the entity, which is made up of many control systems. Now we have covered control activities, let's move on to discuss the remaining 4 components of an internal control system. Risk assessment procedures carried out by the client should be to identify and manage potential business risks. The level of risk assessment will depend on the type of organisation, as for example, smaller business with standard systems will have less risks than large, complex, highly regulated businesses. If a business reviews and manages its own risks, it will reduce the risk of misstatements caused by error and fraud. Information systems are an organised system for the collection, organisation, storage and communication of financial information. It includes both computer and manual systems, and the auditor should be able to understand the system and how it works with the help of manuals and staff communication. Monitoring of control systems is important to ensure the controls are working effectively. As an entity progresses, their need for internal controls may change, and therefore the organisation must react to these changes on a timely basis. The internal auditor is useful here, as they are best placed to take on this role. Finally, the control environment. This is the overall environment of the entity. For there to be a strong control environment, management attitude, awareness and actions are important. If the management are enthusiastic about ensuring control systems are strong, this will encourage the entire organisation to have the same attitude. Having an internal audit department in place is an indicator of a strong control environment, as they will be reviewing and implementing control systems as part of their role. Ensuring the correct people work in the organisation is also important, so having good recruitment and training procedures is also a good indicator. Now we have discussed the 5 components of an internal control system that the auditor is looking for, we can now discuss how the auditor reviews these systems to decide whether they are satisfied with their effectiveness. The auditor has a step-by-step approach when reviewing control systems as part of the audit assignment. The aim of the auditor is to assess whether the internal control systems would ensure material misstatements are identified and corrected. If control systems are poor, this increases the risk of material misstatements being within the financial statements. Firstly, the auditor needs to identify and understand the control system. For example, the sales, purchases, payroll, inventory, cash and asset systems. They can use methods to help understand, including inquiry with management and staff, inspection of documentation such as manuals, and observation of the control system itself and those working within that system. The next step is to document the system. Auditors must prove that they understand the system, and so by documenting and including within the audit file, they have gathered sufficient appropriate evidence on this. There are various methods to document the system, the most popular being detailed written notes or flowcharts. Detailed notes are easy to put together, but can be difficult to identify any missing controls due to the level of detail. Flowcharts can be easier to spot any deficiencies, however they can be more time consuming, as detailed notes may also be needed in order to prepare them. Either method then gives the auditor an understanding of the system for their audit work. The next step is to assess the system. The auditors must initially identify whether the internal control system is strong or weak. Whilst understanding the system, talking to staff, observing and inspecting documentation, the auditor will have an idea of what kind of system they're reviewing. In addition to this, the auditor can send out internal control questionnaires to the client's staff to get feedback on how the system operates. There are two types of client questionnaires the auditor can use: internal control questionnaires, or ICQs, and internal control evaluation questionnaires, or ICEQs. Internal control questionnaires are a series of questions on the system that require a yes or no answer. They are therefore quick and easy for the client staff to fill out. For example, a question could be: does the payroll system require a password to access staff data? An internal control evaluation questionnaire requires a little more feedback. The question would be formatted differently. For example, is the payroll system secure? And please explain your answer. This type of question can therefore give you some more understanding of the system and who operates within it. Auditors would now have an idea as to whether the control system is strong or weak. If the system appears to be strong, the auditor must gather further evidence to prove that they agree with this conclusion. This is in the form of control tests or control procedures. A control test is a test that gathers evidence on whether the system is effective. These tests are carried out by the auditor, and all evidence collected is then filed on the audit file to back up their conclusions. Once again, using the methods inquiry, inspection and observation are useful when designing control tests. The objective of every control test should be to prove whether the control works. An example could be when reviewing the security of the payroll system. With the client's permission, attempt to gain access to the payroll system without the password to ensure only authorized access is possible. Or inquire about the security procedures over the payroll system, including the type of password needed and whether it is regularly changed. Both of these control tests would identify if the payroll system's security is appropriate. Once the control tests have been performed, the auditor must conclude whether they agree with the earlier evidence that the control system is strong, or whether they disagree and the system is weak. This is critical for the audit, as it then decides how much further audit work is needed to form the audit opinion on the financial statements. The next stage of the audit process is substantive testing, and this is where the audit tests or procedures are performed to identify if there are any material misstatements within the financial statements. If the auditor has concluded that the internal control system is weak, there is a greater risk of material misstatements present. They must increase the level of substantive testing required. The sample size of transactions being tested would be increased, and more procedures would be designed. This would mean more time spent on the audit also. If the control systems are strong, there is a smaller risk of material misstatements, and therefore no need to test as many transactions. This means smaller sample sizes and less time needed. In addition to control testing and deciding how effective the control systems are, the auditor has a responsibility to report any issues found with the client. If deficiencies in the internal control system have been found, the auditor reports to the client along with recommendations on how to improve the system. This is discussed in more detail in another video. To conclude, internal control systems are in place to achieve company objectives. Control systems have limitations, and so the auditor cannot rely wholly on a strong control system ensuring no material misstatements are present. The auditor is looking for 5 components of an internal control system: control activities, risk, information systems, monitoring and environment. And they follow a step-by-step approach to conclude whether the internal control system can be relied upon. I hope you found this video useful. Thanks for watching.